The first one is we ignore the scientific community to our own peril, like what the COVID-19 pandemic has shown us. Leading experts have been warning about a global pandemic for a very long time. But when COVID-19 hit, we were still caught unprepared. And earlier this year, the market reactions were volatile and disruptive. Likewise, climate scientists have been warning us about a climate crisis for a very long time too. And the consequences of not addressing climate change is far bigger and more long-lasting than the COVID pandemic that we are dealing with today. The second takeaway would be that to systematically change the way we manage our businesses and investments is to consider how we should measure what is valuable to us, because we do not take into account negative externalities like climate change and inequality in the way we view the world today. So we need to seriously think about having a system of metrics that measure what will contribute to long-term sustainable growth. The GDP accounting today that we have doesn't take into account externalities, both positive and negative. For example, investments in education and healthcare are considered costs, but they actually generate long-term benefits that are not properly accounted for today. On the negative side, we need to consider how we would price and measure the cost of the depletion of topsoil, biodiversity, and clean water. How we measure what is contributing to sustainable growth is very important if we want to change mindsets and the way we manage our business and investments. The third takeaway that I got from the session was that there are actually a lot of green opportunities or green technologies that are already available to help us solve the climate crisis, and these are commercially viable. A few interesting ideas that were raised are well-known themes like renewable energy, electric mobility, retrofitting the built environment, circular manufacturing, sustainable forestry and agriculture. Some of the more interesting and newer ideas that I picked up from the session are three areas of investment opportunities. One is that investors might want to look at investing in carbon credits and allowances. Second is the use of AI and machine learning to try to improve processes and energy efficiency. A third area of emerging investment opportunity would be in green hydrogen that could be of interest to long-term investors.